Hello, everybody. We are Acuity. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning. Or yeah, it is morning. It's not afternoon yet. Good morning,
Yeah,
Joe. How are you?
feels like it. Yeah,
Yeah.
I'm good, thank you. Um, yeah, so today another LinkedIn Live from us at Acuity, showcasing the products and the tools that we have available. And today the focus is going to be on the earnings season that we're in the midst of at the moment, talking specifically about the big tech names. Now, markets at the moment appear to be in a bit of a volatile phase, and given that around two-thirds of the S&P gains have come from just 5 stocks this year. It's been a very challenging market phase for all participants that have been involved. All of those 5 stocks also reported this week, so it's not a surprise that there's an air of caution in the markets at the moment. So we're going to take a bit of a dive into why earnings season is very important, not just from a trader's perspective, but also how a broker can also use this information that we've got here to really get ahead of these events and give their customers and their traders every chance of success when it comes to navigating financial markets. So the corporate calendar is the main focus today, as mentioned. So we're going to do a product demo on that. And then we're going to go into some real world examples as well of how we can use this information to give us the best possible chance when it comes to trading. Now, I'm going to bring up the tool on the screen. We can see here, this is our corporate calendar tool, which is powered by Dow Jones. So all of the data that we receive here comes from one of the most reputable sources in the markets, a real powerhouse when it comes to data. And we're focusing here on corporate events, not just things like earnings, but also breaking down into things like dividends, calls, webcasts, stock splits, IPOs, and M&A activity. Now, I'm sure many of you have seen calendars in the past, and typically they come in a column format, can be quite boring. They can also be a bit of a dead end of information for customers and traders and brokers because they don't really lead to any specific calls to action or don't really give any kind of guidance on where price may actually head as a result of these really important events. So, what we've designed here is a unique take on the corporate calendar. And what we've done is color coded all of the events by type. So anything in blue represents earnings, anything in pink represents dividends, purple calls and webcasts. We have a lime green for stock splits and another green for IPOs and M&A. Now, you can see by the numbers on these tiles that there are a significant amount of events that are coming out this week with regards to earnings. There is a whole list of names that are reporting this week, not just in the US, but across the world. So there are ways that we can use this calendar and filter down to find assets that are of most interest to us. Now, with the calendar as well, we've got lots of visibility on not just current events, but also future events and past events. And we can use all of that information to try and form a picture of where we believe prices may head, or try and give us a bit of insight into these earnings events. So that's very important from a broker's perspective because you want to be ahead of the game when it comes to marketing to your customers to let them know that trading events or big events in the market are upcoming, and we can scroll many months into the future to find out when companies are reporting and get some key information on those. But if we focus back on the current week, we can see here in yellow that we've got today's events down here. We can scroll on the particular day, and we can also filter using various different methods here, so we can focus on earnings specifically. That is what we're going to be focusing on today. So I'm going to tick that box to try and shrink down the amount of results that we've got. And we're also very interested in technology because it's the big tech names that really are the focus this week for the market. So just by filtering that, we've reduced the search down to 49. We also have a search function up here. So if there aren't any names that are appearing on this list that you're expecting to see, you can actually do a deeper dive by typing in the name of the asset, and it will bring it up for you like that. So we have on the screen here a number of events that have occurred over the recent week in technology. Today, we've got 21 stocks that are reporting in the technology sector, and yesterday we had 13. So we can focus on today's events. We can also focus on yesterday's events to see the sort of impact that earnings events are having on stocks. In fact, I do want to take a quick look at yesterday because there were some big names that were reporting. Once we click on the tile itself, it will bring us down to a more granular view of the individual names of the companies that are reporting. And what we have here is all the names listed, the ticker codes, the name of the stock, and also the actual metrics that we need to be aware of as well. The one I'm quite keen on focusing on from this point of view is Microsoft, which reported yesterday. So yesterday was Tuesday. Sorry, I'm getting ahead of myself. So we can see here that there was a number of companies that reported. We can see anything in red suggests that the numbers actually came in below the analyst expectations. Anything in green came in above the analyst expectations. So this is where obviously we can see surprises in price when these numbers are, far out from what the expectation actually was. Let's focus on Microsoft. So we can see here we've got a couple of things that we need to point out. First of all, we've got AMC written in here. Now, this is mentioned here in a handy key, which tells you what all of these abbreviations mean. So we have AMC, which means after market close. So this means that the company is reporting after the market close in the US, which is after 9 o'clock UK time. But we also have BMO because some companies also report before market open. So that's highlighted there. We've also got some interesting functions here. So as we mentioned, we've got lots of visibility of future and upcoming events. And if you want to be alerted to these events in good time, what you can also do is use this handy icon here, which will allow you to add this to your calendars. So if you wanted to be alerted a week, a day, 5 minutes, 10 minutes before the event, you can customize this into any calendar that you use, whether it be any of the ones mentioned on the screen, or you can download the file as well and apply it to any other calendar should it not be on the list. So a very handy tool indeed. Now, if we look at the metrics here, let me just scroll in a little bit to make this a bit bigger on the screen. We can see here that the previous earnings per share for Microsoft was $2.2. The forecast for the earnings this time round was $2.24. And also what we can see here is the actual. So this information is published in real time. So as soon as the information is made live via Dow Jones, this information is published into our terminal and give you very quick visibility of how the number came in versus the expectations, because this is what moves markets. It's all about what was the expectation and what was the actual number. So in this instance, because we've got it in green, the number came in better than expected. We can see that here. The actual number was $2.45 on the earnings per share versus the forecast, which was $2.24. Now, additional information that we have here. So we have corporate descriptions, very self-explanatory. This tells you all about the business and why maybe it could be of interest to you. You can dig down into what it is the business does. Sometimes you might not be aware of what these companies do. So use that as a purpose of educating yourself about who these companies are and the sort of businesses that they run. So we can see here, because the earnings event is now in the past, we're now focusing on the next earning event, which is on the 25th of July. Again, we can add that to our calendars if we so wish, so we don't miss it next time round. And we've also got a countdown to that particular event as well. So this is where it starts to get quite interesting from a trading perspective. Certainly from Steve and I's perspective anyway, and we can actually look at the corporate history of the earnings on Microsoft. So we can visualize here how accurate the forecasts have been and typically what sort of reaction we get as a result of these earnings events. So the white line that we have on the screen here is the price line. Of course, price is all important. But we can see here these green and red dots, which indicate whether or not the actual has come in above or below the analyst forecast. So we can visualize that on the chart. So what we can do is actually look back at the historic events to see typically what the ranges have been, both 1 day, 1 week, and 1 month after the earnings event. And we can also see the forecast versus the actual and the difference, the surprise index for that particular event. So we can see that the numbers here in the previous quarter, the fourth quarter of 2022, actually came in 7% below what was expected. We can look back again here and see that this is 1% above, and we can also see the market reaction from this as well. So what we want to look at now is how we can actually interpret this information ahead. So there's obviously various ways that a trader can try and take advantage of earnings season. Typically, volatility is a given. We expect that to be the case. So because there is high levels of volatility, it means that there can also be opportunity for those traders that can interpret this information successfully. So how do we do that? So Steve and I, big fans of price action analysis and technical analysis and looking at charts, but also, that's not typically enough now when it comes to financial markets. It's a very competitive environment. And we're up against, some of the sharpest minds and smartest people in the world who are all competing on the same stage. So what information can we take from this to try and get ahead of the game? So if we scroll down here, we can actually see that we have commentary for the specific company, and it looks as though I've changed there from Microsoft. Let's go back to Microsoft. So we can see specific commentary with regards to the earnings that came out yesterday, and we can view that all within the platform without having been taken elsewhere. Again, that's all provided by highly reputable news sources from Dow Jones. But interestingly, what we can also see here is news sentiment, which is a tool that we specialize in. It is part of our toolkit that we use on a daily basis. We can see here price in white and the color behind it indicating news sentiment. So things have been pretty mixed here of late. And if we look at the earnings history, typically we have seen beats, we have seen numbers coming above expectations, but in the last couple of quarters that has been challenged a little bit. The forecast has been quite accurate, and we can see that by the distance between the actuals and the forecasted number. So using something like news sentiment could potentially allow you to get ahead on the markets. Steve, I don't know if you're looking at a chart on Microsoft at the minute.
Yeah, I am, Joe. And one of the main things I think when you sort of like compare them both, basically a chart and the images that we have, but we obviously only show a very basic outline of the price, the closing prices. And so maybe you don't see the full reaction of maybe what might happen. So if we look at the Q2 2022, there was a surprise to the downside on the earnings above. And you can see that sort of price action. Basically, if we go back to this to the left of that, Joe.
Yep.
Q2.
This one?
No.
No, sorry, this one.
Yeah. And so we saw that surprise to the downside. It was like a negative 3% surprise. But then I suppose when you compare it to a chart, which this has a lot more detail in it, obviously the chart. It's obviously that you can see that the trend continues downwards, but over a few days it did have quite a big spike to the upside, and you can see how these earnings events really impact on price. You can see here we had the surprise to the downside, just as we've shown on the Acuity chart, and we had a really massive rally to the upside, which would have caught a lot of people by surprise. It shrugged off the news that next day and moved to the upside. And obviously over time, prices continued to move lower, and you can see the sort of reactions and the sort of moves that we're getting just on these sort of like earnings moves of 10% and things like that. So obviously we've seen another move yesterday with that overnight price action, and we've got just a 2.5% move to the downside at the moment. But you can sort of see how key these figures are, and it's really key to understand how these calendar events, earnings events, can really affect price action as well.
Yeah, we can also see that the pre-market price is being indicated there as well at 297. So that indicates that we are this because we saw the beat in the forecast today. We're expecting to see higher prices here on the open.
Yeah, it's a 10% surprise in the actual reported figure and the estimate to the upside. Yep. So yeah, we're going to get that spike higher, and price action definitely. You can see since the sort of start of the year, we've had a really decent rally in Microsoft.
Absolutely.
And, yeah.
Okay, so the other thing I wanted to point out on the calendar tool, so we actually received the earnings data 90 days prior to the event. So then we can actually start forecasting the expected ranges based on these. So we're looking at individual ranges here. And if we click on them, we can see the reactions. There was a move to the downside overnight, as Steve mentioned, but it looks as though it's going to reverse on the open. And we can dig down into each of these individual earnings events. But when we look at, when we get to the point where we have the data in from Dow Jones, as I mentioned, 90 days prior, let's take a look at Netflix here. The next earning report is not until July, which we now have listed in the calendar. But what we can also do is look back at the previous earnings event, which came out on the 18th of April. Now, this is a really interesting one for me. So we can see here that the previous came in at 0.12, so a very low number. The forecast was for much higher this time round at $3.07, but the actual came in at $2.88. Again, corporate description there. And then we have the earnings history for Netflix. Now, when we have these icons on the right-hand side, when we don't yet have the earnings details, because this is going to be happening in July, we can actually click on that icon there and then get a potential price range for earnings based on the previous 10 events that we see here. So the average expectation based on the data that we have is that prices have typically moved higher by 2.29% after earnings with regards to Netflix. Now, of course, this isn't a guarantee. And if we go into the individuals behind this, we can see that there's been a variety of different price moves. So there was a 0.3% price move last time round. There was a 5% move the time before that, and a 1.7% negative move the time before that. But how can we get ahead of this? Again, we can look at the new sentiment. I think this has been really interesting here because we can see that price has been moving lower prior to the event. So we've got the 17th of April here. So we know that Netflix came out with earnings the next day. Prior to that event, we could actually see that new sentiment was already starting to decline ahead of the major event and price was following. So that may have given us an indication that actually Netflix may have actually missed or was going to actually miss the earnings forecast, which they did. So in this instance, its predictive qualities by looking at new sentiment and price was actually very accurate. So that's really encouraging for us from a trading perspective. Now, what we can also do is take a look at the chart here of Netflix, because I think that was quite interesting too. And what I have here is an hourly chart for Netflix. And this was the earnings event we can see here. And prior to the earnings event, this was the hourly chart. So we're looking at much shorter term timeframes here. So really appealing to those traders that are really looking for quick opportunities to get in and out of markets over a short period of time, of which most traders now appear to have much lower timeframes that they're looking to execute on. So prior to the event, we can see prices were moving lower. Then we had the event itself, and it created this huge gap on the charts. So we had on the chart already that we knew price was moving lower, we knew sentiment was moving lower, and lo and behold, the price moved lower as a result of that on the open. Now, interestingly enough, we are predicting, based on the charts and the historic data that we have, that on average, Netflix moves higher by 2.29% one day after the earnings event. Now, if we apply this to a price chart and take the opening print on the day after earnings, so rather than having to make a bet prior to earnings event and taking on all that risk, we now have the information and we can start to try and work with that. So if we take a price measurement from the opening candle or from the opening price on Netflix and actually project that 2.29% higher, which is on average where we believe price will go, we can actually see it got very close to that within 24 hours. And in fact, if we'd left it a little bit longer, it did actually go on and achieve that upper price boundary. So that for me is really interesting. We've looked at the data, but on average, we do expect Netflix prices to move higher because that's what we've seen over the past 10 events. Obviously, history is no guide to future performance, but it's an indication. It's another level of confidence that we can give to our trading. And if you were looking to buy the dip on Netflix and use that as your potential price target, in this instance, it would have worked out quite nicely. Something also quite interesting here is if we project 2.29% lower and use that as kind of a range on the price, we can see that pretty much the price bottomed out very close to that level as well. So if you was even more patient or quite savvy in your approach here, you may even be able to get your buy orders on very close to the lows of the session before then seeing a very nice rise to the upside over the next 24 hours. I'm not going to go into too much technical information because Steve and I could be telling you about gaps and formations and prices, price patterns here. Today, we just wanted to focus on the raw data and the information that we're getting from the from the corporate calendar. Sorry. Any comments there, Steve?
It's great how we can combine the analysis and really get this this sense of forecasting tailor-made really, and really sort of like focusing on fusing both analysis together. The corporate calendar, from the corporate calendars that I would first saw on the floor about 300 years ago when I first started trading. The advancements now, it basically just shows you how you can really take like one event and really break down all the detail behind it and really get so much more information, and also sort of like have that look back at where the these sort of like events have impacted on the price, and really sort of like gives you an indication of how the market reacts itself, how that from a volatility perspective, if you can set your expectations, then you can be much better prepared when you apply your trading plan for each individual asset.
Absolutely. Now let's take a forward look here at an upcoming event, and that is one of the tech giants, which is Apple. So if we click on Apple using the search function, we highlight that Apple is due to report earnings on the 4th of May. So this is coming around very quickly. If we wanted to be alerted to that, then obviously we can apply this to our calendar as we've previously mentioned, but also from a marketing perspective, if you're a broker and you're looking to engage customers and make them aware of upcoming events, I'm sure there are many, many people within your portfolio of customers that are trading Apple or have traded Apple in the past. So we know this is going to be something that is of interest. So we can use this to our advantage to give them some indication of upcoming volatility and maybe what they can expect based on what we've seen previously, and also use things like new sentiment and price to try and build a bigger picture. So
I think that's
Apple,
the key, Joe, as well. One of the main things that we're looking at is everything you see is available via an API. So as a broker, you can take all the information, all the data points, and we can now create really, really fantastic looking dynamic emails that the marketing team will be drooling over. And it's very easily created, and they can be the sort of like give information that a trader needs to know to prepare themselves for the events that are coming up. And it is becoming a very clever world that we live in.
absolutely. And not just that, you can use this in forms of push notifications or messaging via other applications. Obviously, you could extract some of this information and make it, you put it on TikTok if you wanted to. There's plenty of places where traders are now going for information, and it's important that you can go and meet them in those destinations and use that information to acquire new customers, to retain them, and to engage them. So let's look at Apple. So previous, we saw earnings per share of $1.88. The forecast this time is for a lower number at $1.43. We can look at the history and we can see that typically Apple, it comes out ahead of expectations, but actually the forecasts when it comes to Apple are generally quite good. There's no massive gaps between the forecast and the actual number. We can see that last time round, that there was a miss on the earnings, but actually price rose 2.45% in the one day after that, despite there being a surprise to the downside by 8%. So how are we going to get ahead of this when it comes to trading or looking at Apple as a potential trade or investment ahead of the earnings that's coming out on the 4th of May? Well, we can again look at what's happened previously. So despite us mentioning that typically there's lots of volatility around earnings, actually on average for Apple, we actually expect prices to decline by around about 0.98% based on the last 10 events. So that is maybe an indication that Apple may not be the most suitable investment or trade from the buy side based on information that we've seen previously. But as we mentioned previously, we can also look at other factors here. We don't need to just focus on what's happened previously. We can actually visualize what's happening now with regards to price and new sentiment. So this will obviously update in real time. And by the time we get to the 4th of May, there'll be more information here that we can digest. We'll understand more about new sentiment and what's most relative with regards to new sentiment, and we'll understand a bit more about price. Looking at the price there, we can see that things maybe flattened off a little bit and broken down, maybe through some key support there on the price. We may take a deeper look at the chart there in a moment, but we can also see that due to this rise here in price, new sentiment was actually very tightly correlated with this as well, but is actually breaking down through the zero line at the moment, suggesting that overall new sentiment is actually turning more negative. So maybe Apple is not a great opportunity from the buy side in the upcoming earnings event. But of course, many brokers offer trading two ways on assets now. So you don't need to be limited to just buying. But if you were considering buying ahead of earnings, maybe you'll now think twice. And hopefully, we can help you make better decisions with the information that we've got. And if we combine this with other analysis that we can do, Steve's got the Apple chart up on the screen here. Again, really important to highlight how important these earnings events are. Steve's got them highlighted on here with vertical lines, and you can see the E icon at the bottom, which indicates earnings. And you can see typically it is creating pretty large movements in markets. It can be reversals in markets, it can be big gaps on the charts, but ultimately, we do believe opportunities exist as a result of earnings.
Yeah, I think one of the main things you highlighted there, Joe, is the sort of like, it feels like we're expecting a move to the downside on Apple. And if we're just looking from a technical perspective, we could see since January 22, we've seen this steady decline, posting lower highs on as we've gone along. It's drawing a really nice downward trending resistance line here, and we've just stalled recently, going back to the 19th of April in front of it. And then we're getting this bearish movement over the last 24 hours as well. So I think overall it's a good indication that yeah, this Apple isn't going to put a smile on anyone's face anytime soon with this stalling and new sentiment backing it up. So
Indeed.
it looks pretty ties in really nicely with a sort of like a potential top in the market.
Yeah, indeed. So plenty of information here for everybody to use, whether you're a trader, whether you're a broker, lots of ways of distributing this data and getting it out to your customers and making them feel like you care really from a broker perspective, because often, brokers are accused of not caring, but, you can use this information to show them that there is data here that can be used to their advantage to try and get them to make better trading experience, trading decisions, and therefore have better outcomes. So really important from a retention perspective, keeping customers live and trading and making money. So Steve, I think we're going to wrap it up there. We don't really want to go over the half an hour time slot with this. So it's been great running through this. I hope the people that have watched it have enjoyed it. If you have any questions or would like further information about this or would like a demo, then you can get in touch. There should be links at the bottom of the LinkedIn stream that will allow you to contact us to request further information and some demo access for a limited period of time. So again, thank you everybody for watching, and we'll be back again with a stream sometime soon.
Thanks, Joe. Cheers.
Bye-bye.